In an interview with Jeremy Grantham, president and CIO of GMO, a global investment management firm, Grantham warns that the world is in for an economic crisis that is worse than a recession. Grantham believes that the stock market is vulnerable to a significant shock that will lead to a crash. He cites an alarming discrepancy between U.S. growth forecasts and the nation's ability to support those forecasts through rising debt levels as a cause of the crash. Although Grantham agrees with Ray on short-term problems related to inflation, he is more worried about longer-term arguments for inflation. One such argument is that China is running out of people, which would lead to a shortage of labor. The heyday of low inflation appears to be over, and global inflation is at a 14-year high due to the fast increasing demand in the emerging globe and the limited supply of cereals and minerals like oil, gas, and metals. Grantham's outlook is bleak, with deflationary effects on the economy and the stock market, resulting in a world where all assets are simply much lower priced than they are today. Grantham suggests that we may experience a world similar to the 70s. During that decade, deflationary effects on the economy and the stock market led to a world where all assets were simply much lower priced than they are today. Grantham warns that the U.S. economy could suffer a painful correction in equities that would match the pain markets endured in the early 2000s. In addition, Grantham suggests that we need to protect ourselves from the coming economic crisis by avoiding expensive markets and stocks. Inflation gives people the incentive to spend now rather than later to avoid losing their savings. During inflationary periods, your currency loses pricing value, impacting your investment strategy. This affects every person and every business throughout their decisions as to what they need to buy or how much they will pay for a commodity they sell. This also affects structured financial investments that generally invest in things affected by the economic downturn, like bonds and treasures. As global inflation returns, China cannot escape the effects. The heyday of low inflation during intense globalization appears to be over. Global inflation is at a 14-year high due to the fast increasing demand in the emerging globe and the limited supply of cereals and minerals like oil, gas, and metals. Grantham warns that the next 15 years may witness significant inflation. Grantham believes that we are running out of people in China. The 500 million extra farmers that precipitated globalization have had diminishing cohorts of 20-year-olds for 20 years. They are guaranteed to have a shortage of labor since they're alive now, and we know the baby cohorts are dropping like a stone. This is a problem that will affect the developed world as well, as they will all be squeezed for labor. After the bubonic plague, there was a shortage of labor, and this is what Grantham believes will happen again. In conclusion, Grantham warns of an economic crisis worse than a recession. He believes that we are in for a deflationary period where all assets are much lower priced than they are today, resulting in a world similar to the 70s. Grantham believes that we need to protect ourselves from the coming economic crisis by avoiding expensive markets and stocks. Inflation is here to stay, and we need to live with it. Grantham warns that we are running out of people in China, and this will lead to a shortage of labor that will affect the developed world as well. If you found this video helpful, don't forget to hit that subscribe button and turn on notifications so you never miss an update from our channel. By subscribing, you have access to all of our latest tips and tricks for achieving financial success. So what are you waiting for? Click that button and join our community.